Good morning. Welcome to OptionsTender. It is Friday. Everybody. Welcome. It's January 31st, 2025. So we're taking a look at the market top down and what we did with members earlier today. Just the last video I did. We're looking at how can this market go higher? How can the Qs really take us up a little bit higher? How can IWM help? We'll look at some of that on the indices. I went through the big tech names to see what they would look like, and I got to tell you, it's just so difficult to make a case that this market's going higher. And so I'll show you on the daily time frames in the 65 what pattern we're looking at. So the market was going against me today. You know, our hedges, it didn't really work that well. I think I played them a little bit wrong, but now we're, looking past that. We had to step back and say, hey, what's really happening? Why does it look so strong here, but not impulsive? Okay, this doesn't look like a wave 3 impulse, and we'll talk about that. So let's jump into it. We're doing this intraday, 11:45 a.m. Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube member. It's 99 cents. It comes with a Discord and some trade alerts and all these good things. We can talk things out in the Discord, and the traders there have great ideas to come together and figure these things out. And so what we're looking at right now here is SPX on the monthly time frame. We have the 1929. 2025 top here. Even if we eke out a new high, which I think we should at this point, we're at this confluence once again. And I'll show you the pattern that's forming here. We also have this channel top, potential channel. We don't have a real bottom yet. 2008, 21, and right in confluence of what's happening right now. So these candles look oddly familiar with something like this. You have 3 months, each making a new high here. Okay, so clearly we're on the last day of the month, so this is probably going to be an engulfing candle there, but still just touch the top, and we're right there back at the top again. So we're just riding along there, and then eventually it does fail, you guys. I'm not going to talk about, we have the big recession picture of where I'll explain all that. And I put that video up top and at the end. So let's go to, I'm going to stay with SPX just for a minute. We'll go through SPY as well. Just so you can get the crisp look. I like SPX because there's no distortion from the distribution of dividends, and there's no contract changes and like ES. So here again, that was the 3 months. 3 months made a new high there. Very similar. Okay. Now we eked out a new high. Are we going to do it this week? We're right on that trend line. All right. That's just a crisp trend line. I went back to exactly the tops, the tippy tops of 29 and 2000 and 2008. In 2021. So here we go. Do we eke out a new high? Probably. What does this mean? I'll show you on the lower time frames. And again, daily. Went back and just really nailed exactly where those are. We rejected off it the first time. The second time, we're almost there again. That's why I think we're going to probably make a new high. Does it have to? Could this be a lower high? Sure. But we're already here. So maybe that's a double tap either way. So double tap would... if it doesn't, then I'll show you the two scenarios that are likely to play out and what will be argued. Okay. So if we do reject from here, it's I'll show you that. So also I want to show you the indicators. So we have a divergence here on all time frames, but not yet on the RSI in the near term. So if we do eke out a new high here, then we're looking at another divergence here. on the RSI in the near term, but we have clearly on the MACD the fading divergences here. And I talk about this in the MACD video, but when you have a correction, a reset, yeah, we do make lower highs here, but you almost have to have divergences in each time. We didn't in this time. Each time it dips. So you have to interpret this dipped. So it already reset, even though we're getting a lower high. Eventually you get another reset, and then you get a divergence in the near term, and reset, lower high, and then maybe this is where we get our divergence here. But we need a crossover to the downside. That's in another video to go about interpreting the MACD and such. And the 65. All right, so on the 65, I think we'll probably get a consolidation here and move one more move higher. But this was such a shallow move here. So let me go through SPY just so we'll start with the weekly, just so I can get you the time and price. Let's go up to weekly time frame and play this at 1.25 or 1.5 speed so you can get these get the information a lot faster there. So trying to get a weekly engulfing here. Again, we didn't make a new high, but we're at resistance again. Time and price, Fibonacci's. Okay, super important. We have our first next week. That's February 3rd. We have a time on the weekly time frame. So next week, now that we're higher, we're getting highs, we're looking for a top. Okay? So I said if we were lower, we'd look for some sort of reversal, maybe a bounce. We're looking for a top. So what I think is maybe we stop today, maybe we eke out a new high, I don't know. But Monday, I think we might either gap up or waste some time, but get up there and form some sort of candle. Or we start up Monday and start heading lower. So on the daily time frame, here's the megaphone pattern. We're at resistance already. We tagged it. Okay, we can grind a little bit higher to get there. And we should see, here's where tech made its new high. I made a video on why we have these arrows here. But here's this megaphone pattern. All right, it's an expanding pattern. This one is headed sideways, right? So price has to get on top here. And it doesn't matter if you have the megaphone here or not. You have those trend lines from 2029 and 2008. You have to get above those. It has to perform, get above those, and then show us something. All right, we have nothing. We had a shallow pullback here. And maybe it just keeps grinding on top of the 8 EMA. Maybe that's what happens, but we have to get on top of these trend lines. And now this megaphone pattern we have. And why is the megaphone so important? It's actually more important on the Qs. So let's look at the Qs. This is why it's so significant to compare back and forth. It's the same pattern, but the pattern is falling. So relative weakness here. All right, we haven't tagged the top on SPY or QQQ, so that's why I said that we're probably going to eke out that brand new high. But here we're going to make a lower high. Now, again, the Qs has to break out from this megaphone pattern. And you need the help from individual names like NVIDIA and Tesla. So that's why I went through those tech videos and some other names as well. Because if this is a 1-2 setup, you have a huge amount of room for wave 3 to the upside. Okay. Back to SPY. All right, coming up with our next period here is 2.5, 2.6. So wherever we're at going into that cluster, we'll see. We'll see where it is. Still, we have a 1-2 so far. I mean, It doesn't look like that's going to be the case unless this double top lower high and we drop, which could happen, and I'll show you what that looks like. Okay, so we'll leave that alone for a second. We'll look forward to this next little cluster, and let's go to 65 and kind of shape what possibilities. If price does this, then what do we do? All right, so there's the top of the megaphone. I'm guessing that we'll do that first. But with this being such a stubby move here, the argument is going to be, and I'll show you. And take a look at this, the major trend line, uptrend. So take a look where that is, and it'll make a lot of sense. Price, depending on how long it takes, if we start to dip here, about 593 inside that gap area will be the trend line. But if we take a look and put this together with the, all right, so I have the white is both moves, bull and bear, and then white going up here, continuing, it's obviously the bullish representation, and then the bearish will be the purple line here. So if we're looking at this being a wave one, I have this up here. I think this is more like an ABC to end this as the whole scheme of being an ABC setup. If this is bullish and this is the wave one over here, you still have a chance of being an A, B here, and a C down for an expanded flat for a wave one, or if the ending diagonal is going to go up here, this could still be a wave one here, ABC for one, and then you go to pull back for wave two. So either way, we're looking for 1, 2. No matter if you consider this a high or that a high, doesn't matter. And then if you're bearish, we eke out a new high here. We make a new divergent high on the daily time frame, weekly, monthly, riding the historic trends here. We're going to have to reject, and reject soon. You know, not get up higher here and say, oh, well, that's a throw over. No, it's going to have to reject really quick out of this area. And then you get a 1 and you get a lower high. And then price starts to fail. So either way, we're looking for some sort of pullback. If this does somehow grind up on the 8-day moving average and pops up above here and maybe starts to accelerate, then you have your targets that are up above, okay? And you can put those out there. So what you do, and I have a video for the retracements as well. Oh, that's the opposite way. That's not what I wanted. You have the retracements from this correction over here. So we at the top, retracement tool to the bottom of this move, and then clean this up, get all the regular retracements out of the way, and go for the extensions. All right. So those are your targets up here from this correction. Your targets are up here to the 1 or to the 6, the 127.2%. That's 618, all the way up to 630. So that's how we'd be looking at this, and it probably could go a little bit higher. But this would be a 1, 2, and then you get a wave 3, which I think you'd actually move higher than these targets here, because you'd have, unless this is an ending diagonal where it just starts to fail, slowing progress, where 1 is probably the longest, 2, and then you get an ABC for a 3, which is a little bit shorter than 1 or so, and then you eke out a wave 5. And that would be very similar to what 2021 did, where wave 5 was really, really short. And so I have this actually too long there, and we hit those targets. So however that shapes out. But if we fail and get a lower high, then we have something else happening, and I think that would be the top up here. All right, so that's the way I'm looking at this. Again, almost to the top zone there. Almost to the top here. SMH. Now that SMH is within, it's within some of those old trend lines and things like that, not really obeying things very much. This is still just a back test, even though we're right above it. We're looking at just regular retracements now because this, this looks impulsive. Sure, it could be an ABC and this continues to go higher. And that would be the argument that, the Qs are going to go much higher. And so we're at the 50% retracement right now, which we're getting a little bit of a reaction off of. Then you have the 62%, which is midway. And so that would be a regular retracement from, and that's from that high. So if it's a 1, 2, 1, 2, or if you do that, that's a perfect rejection off the 50%. So either way you look at it, we're at the 50, and then you have the 62, which is next if price needs to grind higher. IWM, again, if things are going to move higher, then this is going to have to perform. It's going to have to help out and get to this 233, which is the next spot here. And I know that we're past this downtrend line here. Also note that the 50-day moving average, we're right at it. So it's kind of curling right above us here. All right, so we're still at a resistance, so this could fail, but we could see it did back test. If this starts to hold up, then we can kind of support the fact that the market wants to go higher. At this point, we're just not seeing it. We're just not getting that. So we'll have to maybe gap up overnight and just continue to grind to the upside, or at least get a somewhat decent correction so we can move higher at that point. And DIA is pretty much done its thing. Maybe it has a little bit more to go to eke out a new high, which would be a multiple time frame divergent high. But we have our wedge here that's kind of breaking down. We'll see. We made another divergent high here as well in the lower time frame. So I'm looking for this to, at minimum, correct. All right, so we have the VIX here, just kind of tightening up in a range, still a higher low. This is going to have to break down and make a new low for things to start to get bullish on the market. All right, so watch for this, set some alerts. This starts to break down, especially from this low, then price is probably making on top of that megaphone and heading higher. All right. So in a nutshell, we need to see something happen. Do we go straight up into here, make a divergent high on the daily time frame, and then on multiple other time frames, but the daily needed that extra confirmation? Or do we correct first? So either way, this is still in action, and I think we'll see an impulse wave down no matter what, and then we'll look to kind of hedge to the upside for any bounce lower. Okay, but it's a big but. I want you to be super aware of if negative news comes out, if something. This was how 2000 started. And there's a lot more of them that are actually steeper to the downside. This was actually the least steep for all of the big recessions. So just know this is a 14% move. This happened in 16 days, 16 trading days. I know that's 21 regular days. And I just held it above here just to give you a visual what that looks like. That was a massive move to the downside. So just be careful if you're going to get bullish. Just have a point where you know that you could be wrong. You can just hold on to your longs, hold on to your runners, but just know where you're wrong and just be safe when trading this. All right. So thanks for joining us here at OptionsTender. We'll see you in the next video. I got to get there. Probably see that close sooner than later.